Joining me for a closer look at the day's markets action is Louis Storm from Vega Capital. Louis, thanks so much for your time this afternoon. So trade quite choppy this afternoon, a lot happening in Europe in terms of geopolitics. Just walk me through some of those market movers for the week. I guess trade will be thin, as mentioned, considering that, you know, the US markets are closed.
And there's been a lot of movement again, and we expected that with Trump being president as well. But trade wars has increased volatility and obviously put a lot of pressure on Chinese companies as well as European companies. We saw the German government now indicating that they are going to help the economy. They will, well, they're the new government that possibly will be coming into government. They will help the German economy a lot. So we saw large moves from companies like Rheinmetall and also like a Siemens, which would benefit from any infrastructure upgrades that we might see coming out of Germany.
Yeah, and we saw the DAX making the largest gains on that front. I think it was up just over 0.6%. Just talk to me about the general mood in local markets, Louis, ahead of that national budget.
Yeah, it's, in local markets, it's always that saying of if the US sneezes, everyone else catches a cold. We are sitting and waiting for Trump. It's making it very volatile for us. I think our local businesses, the private businesses, is struggling to get inflows, and also like their own capex is sitting in cash in the bank. They're not actually expanding their own businesses because they too are afraid to actually invest in their own businesses. They don't know what might happen with the Trump administration.
So I guess we're seeing more of a wait and see kind of game. Let's get into some company news. Amplat's out with half-year annual numbers today. The share price jumped over 4% the last time I checked. Investors seem to be upbeat about, you know, the dividend and the progress it's making with the demerger plans. What did you make of those set of numbers?
Well, so the Amplat share price, it performed very poorly over the past 3 years. So I think a lot of negativity has been baked into the numbers. At the moment, we're still cautious just because of the general trend of the global economy. China is still not expanding as we would like to see, and we also are seeing ICE vehicles, which is internal combustion engine vehicles. The demand for that is still not increasing. So that's one of the main drivers for the PGM miners. And Amplat is obviously positioned as one of the PGM miners. So I think at the moment we're still a bit cautious, but a lot of negativity has been baked in and could be a good performer if we do see a return of strong PGM prices.
Do you think we're at the bottom of that cycle, the PGM price cycle?
It's very difficult to say because the demand is coming from the EV vehicles at the moment, and EV vehicles, the electronic vehicles, is not using as much PGM. Actually, it's not using a very small percentage of the PGM. So if we do see a drive towards EV vehicles instead of internal combustion engines, we could stay at the bottom of the cycle for a while.
All right, let's move over to Afrimat, warning of downbeat full-year earnings, pointing to lower iron ore prices, weaker than expected performance from its anthracite units, and as well as a decline in volumes from AMSA. Your analysis of that update?
Yes, so again, the global economy is putting some strain on them. Iron ore export volumes are down by about 70%. We are seeing problems at the ports. We are seeing problems with load shedding. That's been sorted out to some degree. But we're also seeing the rail performance is very poor. So they've got a lot of headwinds to deal with. It's an excellent company, great management team, but there's a lot of global economic or issues that they need to deal with. And I don't think it's going to be that easy for them.
Would you say that turnaround at Transnet is taking place fast enough?
Fast enough. it's a relative measure. I'm not sure if it's fast enough. I think no one will ever say it's fast enough, but it will obviously help Afrimat a whole lot if they do get Transnet going as fast as possible.
Let's look at Quantum Foods. They're forecasting an improved performance, benefiting from improved energy supply and high egg selling prices, as well as, there hasn't been cases of bird flu during the period. Just an analysis on that update, considering that they're also still warning that there could be possibilities of further outbreaks.
Again, another company that's been slapped with headwinds over the recent past. Bird flu, which you mentioned earlier, lost them around 37 million rand worth of birds. So, they struggled, but we do see a lot of tailwinds going forward. Load shedding reduced meaningfully, inflation is decreasing, feed cost is stable, and the supply of eggs is increasing. It's going to increase by around 70%. So it could be looking good for them. Margins could be increasing. These types of businesses are very sensitive to feed costs and supply disruptions because margins aren't massive even at the best of times. So I think we could see some price movement there if they can maintain this.
Let's move over to CA Sales. They're planning to acquire a 35% stake in a Kenyan company, Tradco. They're just, deepening their Eastern African exposure, right?
Yeah, that's true. It hasn't proved to be very profitable for other companies going into Africa, other South African companies going into Africa. So we'll have to wait and see on this one. We haven't done much research on Tradco and on that transaction. We will still do that in the coming weeks. But it looks like there should be some synergies that they can unlock. And hopefully this proves to be a good move.
All right, let's just hit course on the conversation. Before we get to your stock pick, let's reflect on some counters that have found favor with your industry peers.
Very briefly, I want to punt the PGM sector. When Amplat is unbundled out of Anglo American, the weighting of the platinum sector is going to go from 4% to 6%. And that's in the SWIX and in the SA MSCI. So there'll be a lot of passive fund buying. The platinum metals are up 10% year to date. I think it's an unloved sector. And, I think it's a good opportunity to implement a contrarian view. So any of the platinum shares, just because the weighting is going to become meaningful in the index.
Over the last 2 years, the S&P 500 market cap weighted has really been the place to be, led up strongly by those magnificent 7 shares. But what you've got now is that they are really dominating that index, approximately a third of it there. Yeah. And you could argue on very high valuation. So my sense is that this US exceptionalism is likely to continue under the Trump administration. But to get more meaningful exposure to the other 493 companies in that index, this equally weighted index gives that to you. So reduces concentration and single stock risk. And this index has actually historically outperformed the market cap weighted one. So we think it's a good time to be going in there with stretched valuations on the top couple and still giving yourself nice quality US exposure.
So Devin, betting on the US economy, picking an iShares S&P 500 ETF. We spoke about PGMs. Shane, betting on PGMs. You weren't really that upbeat about Amplat. Are you more upbeat about the other PGM players?
From a valuation perspective, PGMs look really, really cheap. I mean, and I do think for good reason at the moment. Trends are not looking, it's not in their favor at the moment. Yeah. I mean, as I mentioned, you see the drive in EVs instead of internal combustion engines. So it is cheap. I can see the investment case being made for those companies. But at the moment, we are quite cautious on PGM.
And what about...
the S&P 500, S&P 500 is very bullish on. We still think there's more value. We think Trump measures his performance on the performance of the S&P 500. I think there will still be a drive towards increasing margins, and the economy on that side is still very strong. Unemployment is still low. So I think we can... Obviously, there's some companies in the US which are quite expensive, but there's still some good value companies in the States.
All right, let's get into your stock pick. What are you choosing today?
No, my topic thinking. It's been quite a volatile one over the past 5 years, mainly due to the Chinese government. There was a huge regulatory crackdown, and more recently, the U.S. Department of Defense designated Tencent as a Chinese military company. So it's been a very exciting stage to hold. But if you look at it from a valuation point of view, it is so much cheaper than its U.S. counterpart. It's a very good company with a strong competitive advantage. It's growing revenue at a good pace, strong margins. We see good value. I mean, over the past year, I think share price has increased by around 70%. So, yeah, we see good performance there, and we are going back. We won't be buying all of China, but we are looking to get back in by buying 10%.
All right, Louis, thanks so much for your time and taking us through trade at midday. That was Louis Storm from Vega Capital.